When most people hear the word investing, they mostly think stocks and maybe bonds. But those are not the only way to grow your money. In this video, I'll be sharing alternative investment options you probably haven't heard of, and some might surprise you. Let's get into it. Hi, my name is Ola. I have over 15 years experience in finance, investing, and economic analysis. And on this channel, I explain personal finance, investing, and the economy in simple English. So if this is your vibe, if it's something that you're interested in or you think you need at this time, please subscribe and hit the notification bell so you get fresh content from us every week. Now, we know that stocks and bonds are there. If you don't know what stocks are, please drop in the comment section. If you'd like me to do a video on what bonds are, also drop in the comment section. I'll take note of it and I'll be sure to do a video explaining these things well. Now, alternative investments. Now, we know that stocks and bonds are good, right? But sometimes they don't offer the kind of returns that we are looking for, or we want something different. We want what is called alpha, that is that additional return, right? Plus X to the return to the basics, right? Now, alternative investments offer higher return. Sometimes they offer steady income, and sometimes they are a hedge against inflation in some situations, right? But it's important to note before I highlight the investment opportunities, because what I'm really going to do is just talk about investment opportunities that we have either jumped on or we have brought to the Money With Club. So before I jump into highlighting investment opportunities that we've either invested in or brought to the Money With Club, which is my investment community, hey, see our shirt? Yes. What I need to highlight is that when it comes to alternative investments, you are taking higher risk than normal. You see those stocks and bonds, they are the boring investment. Even in the club, I always recommend that at the start, you should have at least 60% of your investment in the boring things, like the bonds, the stock, like the really boring things. And then that 40%, you can use it to do the fun, exciting stuff. Why? Because high return is a reward for high risk. And high risk, in simple English, means that there's a high chance that you will lose your money. I repeat, high risk is not just a word. It implies that there's a high chance that you will lose your money. So when you see high return, just at the same time understand that you are seeing high risk. Even if you don't understand what the risk is, understand that that high return is rewarding you for something, right? And so even if you don't understand it, right, know that there's a risk that you don't understand that is being priced into this thing, and that is why it is so high. Now, so let's jump into the investments that we've done in the club, that we've explored in the club, starting with the obvious, venture capital. So let's dive into 5 alternative investments that we have explored in the club, starting with the obvious, venture capital. So venture capital is basically investing in businesses, investing in companies, early stage companies, right? In the club, we've done investment in telecoms company in Nigeria, a transport and logistics business in Nigeria, a YouTube channel focused on African kids in the UK, medical diagnostic lab in Ghana. Like, those are like interesting things. And when you hear what these companies are doing, it sounds so plain because I'm not dropping their names, but high turnover, high cash flow, and in different currencies, very, very, very exciting. But remember, high return is a reward for high risk. It's not always that straightforward. Do you understand? Remember that. But these are real ventures and they are backed by real demand for real goods and services within economies. Right, so you need to understand that. Now, the second one obviously is real estate, which is quite familiar, just buying to let or to put on Airbnb. And some of our members have invested in property in Nairobi, Kenya. Like, it's exciting. It doesn't always have to be in one place. Remember, the world is your oyster. Shine, go anywhere you want to, right? It generates solid, steady cash flow, especially in tourist zones. Think about it, like there has to be some strategy to your real estate investing. Now, on the back, like a subset of real estate is development project. Real estate is in stages. There could be the start, owner of the land, do a JV, and then there's off-plan sale, there's fully developed sale, there are all those stages there, and people need financing for each of those stages, right? And we brought development projects to the club at different stages. We even brought a car wash in Canada. What am I doing here? I'm telling you that there are opportunities around you. If somebody is doing something that is making money, it's an opportunity. Yeah. Real estate developments don't have to be long term. Like, so these projects, like the one from purchase of land to selling at off plan, is like a 6 to 8 months project, right? And you get your return and you are good. right? You don't always have to be there. It doesn't always have to be long term. Right? That's what I'm saying here. These are opportunities, right? By the way, the club is the Money with Club. If you don't know about us, visit our website. The link will be somewhere down below. And also sign up to our free newsletter. We share what we're doing in the club there. And we're also moving into like a deal share section in our newsletter. So you might want to sign up even if you're not ready to join the club right now. Yeah? Now the fourth one, it gets more interesting. Creatives, right? What is creatives? In this context, we've actually seen opportunity to invest in music, in a music production house, and in movies, but that music one, we ended up not jumping on it. But for movies, we've been doing movie investments since 2021. And what's that basically? Basically investing in the funding of a movie project, and then you make your profit once the movie is sold, either to the cinema or a video demand company or wherever the movie is sold anywhere in the world. There are movies on the plane, somebody bought them, so there's opportunity, right? So movies, we've done that, and it's actually quite exciting, right? When it sells to a distributor, you make your profit, and it's as simple as produce, sell, share, profit. But it's not that simple. A lot goes into it though. But yeah, it does happen, right? And then the next one is art, right? Art is really the most subjective of them all. The most important one, I mean, because we've had art experts come and talk to us in the club about this. Buy what you love. Start with buying something that you love. You never know what will appreciate. Art can be a store of value, and sometimes a statement investment. Like, yeah, it can, but it does take time. And you need to have the liquidity for it, but start with what you like. I think that's the most important rule when it comes to art. Now, the last one, I dare say, got me quite excited. It was very, very interesting, and it's wine, investing in wine. Now, you agree with me that wine becomes rarer with age. Why? And why does that happen? Because most of the bottles get drunk, literally. And so if there's 2021 wine, right, most of it would have been sold in 2022, 2023. By 2024, it's getting scarce. But imagine in 2031 or in 2041 or 2051, right? What happens is that bottle of wine that you bought for like $100 can actually be worth $4,000 or $5,000 if you just keep it. Just keep it, right? So if you buy highly rated wine, like store it well. That's what happens. Like if you have those uncles that be like, oh, this is 1881, blah, blah, blah. Imagine the price of that bottle compared to the price that it was at that time. And so there are actually companies that actually would buy the wine for you and store it and keep it in storage for you until you are ready to sell. And in worst case, if you decide that you're not ready to sell or you don't want to sell anymore, you get your wine, you drink it. Wine actually does have a natural scarcity factor over time. The question is, how long can you wait, right? And so that's an investment that we brought to the club, right? Now, massive caveats. Massive caveats. All these are risky. All of them are risky. Like, and I said earlier, high risk means that there's a chance that you will lose your money. So as much as you want those alphas, you want those excess returns, you want those additional returns, it is fine and it is valid. I repeat, let 60% of your investment be in the stable, boring stock, and then do the other ones on your 40%, so that one or two that will do extremely well, because if you're consistent, one or two will actually do extremely well, will cover for the losses, and your heart will still be intact while all this is happening. And why do I say that? Because even in our venture capital journey, right, we have one company that its current valuation is at 120x in a span of 3 years, and another one that is just there, like just there. But if you have one that is 120x, if you put $1,000 into a 120x and $1,000 into the just there, you see that the return of the 120x has covered and your heart is still fine, right? That's how it works. However, don't put all your eggs in one basket, certainly not an alternative investment basket. That's one. The second thing also is that some of these things may not necessarily be exciting to do on your own. Why? Because in the club, we have professionals, we have due diligence partners, we have members of the club that do their own social due diligence before we decide to go into something, right? Such that it might not be great to work alone. Just putting it out there. The risk is heightened when you do these things on your own, but it doesn't mean that it does not work. it doesn't mean that it doesn't work. So yes, today I've just highlighted that there are actually opportunities, right? The global investment space is evolving. Don't limit yourself to just stocks and bonds. There are opportunities everywhere. But the smartest investor is the one who does their homework, right? So subscribe to our channel. Thank you for watching. Don't forget that you can't outsource your health and your finances. You have to engage. No one can go to the gym for you. No one can exercise on your behalf and you be fit. No one can eat vegetables on your behalf and you be healthy. The same way that you can't outsource your health and your finances. You always have to engage. See you in the next video. Bye.